Good morning, everyone, and welcome to the Secrets for Trading the Crude Oil Inventory Report. My name is Gil Mercer, and I will be your hostess for today. Now, before we get started, I would like everyone to take just a few moments to read over the Nadex risk disclaimer. This disclaimer is for your protection as well as ours. And the most important thing is to remember, even when trading binary options, there is risk involved and you can lose money. Can everyone hear me this morning? Okay, just wanted to make sure. Now, for those of you that do not know me, my name is Gil Mercer. I am the founder of Traders Help Desk, and I have more than 15 years of trading experience. I did start out with a company that programmed indicators for trading and just fell in love with the price bar. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, and The New Trader's Guide to Trading Nadex Binary Options and Spreads. All of these books can be purchased on Amazon or my website. Now, the secret to trading crude is how much does it actually move off of this market report. And for that information, we actually look at the historical data. And historically, the typical average range, meaning from the high to the low, on the 15-minute bar immediately after the market report is about 80 cents to $1. Now, sometimes, especially during the summer months, you may not see that type of movement, but typically on an average basis, historically, this is what it has been. Now, what a lot of traders don't realize is that the Canadian dollar has typically a positive correlation with crude. So that means if crude goes up, the Canadian dollar normally will go up. The USCAD actually has a negative correlation in this scenario historically because the USD is the first symbol in the pair. So if crude goes up, the Canadian gains strength, which means that the US dollar will be weak. So the USCAD would go down. Now, this is an example of a crude oil inventory report from June. And crude is on the top, and this is a 60-minute chart, and the US CAD is on the bottom. And you can see at the market report, crude went down, the US CAD went up. This is typically what we will see when the crude oil inventory comes out. Again, I stress typically because it's not always for certain. Okay, this is on average the correlation, but sometimes they'll actually go in the same direction. Now, before we start looking at charts, I want everybody to see my contact information. And again, my website is tradershelpdesk.com, and my email address is gm@tradershelpdesk.com. Now, let's go and look at the charts before the report actually comes out. And in this case, I've already placed trades, both long and short. There's no direction here, using a combination of spreads in binaries, both 2 hours in dailies, okay? And again, this is no particular direction, okay? The dotted lines show you the binary options that I have that are a 2-hour binary option. So in other words, I've got a 2-hour crude at 55.01, and this is a short position. Then there is a long position at 55.65, again for an 11 a.m. expiration. And then on the Canadian, I have two spreads. I have one, the 26.50 to 27.50 area, and then I have the 27.50 to 28.50 area. I also have a spread on crude to the short side, which is 52 to 55. But then I also have a long binary at the $56 area. Okay, now the reason that I did this is I wanted to go ahead and mark the chart so you could see, because this is really educational, okay? And this is showing you don't necessarily have to have a market direction, okay? What you're looking at is your risk. In this case, I have a risk on crude, and that risk for a daily, because the daily is the solid green line, the risk is $15.25. But I also have a short spread that has $10 of risk. Okay, so the total risk on the daily binary and spread is $25.25. That's trading one contract. But then on a shorter term period, I have a long binary at 55.65 that has $25 of risk. And then I have a short at 55.05 for $24.50. So that gives me a total risk of $49.50. What is the maximum payout on any binary option? The maximum payout is $100, right? So even if one of these 2-hour binaries was to expire in the money, then you still have the profit potential of $50.50. Does everybody understand that? And remember, this is non-directional, okay? I don't know where it's going to go, so I'm going to do both a long and a short. Now, you do run the risk of losing the $49.50 if crude expires right here in the middle, okay? In other words, it doesn't expire above, or it doesn't expire at the short strike or below. Does everybody understand that? Any questions on that? Now, on the Canadian side, I have a long spread that has $37 of risk, and then I have a short spread with $3 of risk. These are on the 2-hour spreads, okay? And again, this is just to show you an example of how you can stagger binary options during a market report. Now, the total risk on these two, which are the dotted lines representing the 2 hours, is $40. Okay? Now, the only limit on the spreads, in this case, I bought the floor, which is the number on the left. So the number on the right is where it limits the profit. Does everyone understand that? In other words, if this goes all the way up to 1.2851, then you have made the maximum on that spread. However, it could also simply go to 1.2790, okay? That's always a possibility. Does everyone understand that? In that case, you would only make the difference between where the premium was on entry and what the expiration value was. In this case, it would have been approximately $4. Does everybody understand that one? But then on the daily, I actually have a long binary and a short binary. Now the long binary had $17.50 in risk. The short binary had $24.25. So that gave me a total risk of $41.75. In other words, you have almost $60 of profit if one closes in the money, okay? Now, it depends also on which one expires in the money. If you have the one at 1.2760 expire in the money, then you have made right at $75 on that one. But remember, this one would lose money, so you would have to subtract that from the $75 profit. Does everybody understand that? You can always set a profit target, Jerome. You do not have to wait for expiration. And that was the next thing that I was going to show you. Okay, so in this case, you don't always have to wait until expiration. Okay, in this case, on all of the binaries, you can see that I have set targets depending on whether I was long or short. So for example, on the crude 55.05, if price reaches down to 20, then I could potentially get filled. Or if the crude long position reaches a value of 85, I could be filled as well. So you don't always have to wait for expiration. And sometimes even having both positions on, you can actually also be profitable. There's a lot of different scenarios. For example, this could actually spike up and then spike back down, in which case you could actually end up being profitable on both sides. It does not happen very often, but is there a potential for that? Yes, there is. Does that answer your question, Jerome? And additionally, I mean, if you're watching the charts, you could say right as the market report comes out, okay, I don't think it's going to go up here, so I'm going to close that one out, but I'm going to actually remain in this one, okay? In which case, you may not lose the full premium that you entered or the full risk where you entered. You could actually close it out early, and then the other one could be profitable. And remember, you know, you're expecting historically an 80 cents to $1 move. So let's say that it moved down $1. Well, that puts it right down here at $54, okay? What if it goes up? Well, it could go up to $56. Does everybody understand that? Because your historical move is 80 cents to $1. Pretty much it is what you do when you're closing a spread. You have one of two options. You can just wait until you're in profit, or you say, okay, I don't think this is going to close in the money, so I'm going to close it out. In which case you can simply, let's pick one that has, for example, this one. You can actually go in here and say sell, and then you have a premium here, and you could sell it. The other thing you can do is actually put in a profit target even on the spreads. For example, the short crude is at $54.90. That was my entry price, okay? And I'm just going to circle it because that's very important. If you want to put in a profit target, this is a short position. So you have to put in a number that is lower than this number. Okay? So you could go in and put, for example, 54.75. Okay? Now, what is the difference between 54.90 and 54.75? It's 15. In other words, you would have made $15 if you were filled at this price. Does that clarify your question, Jerome? Now, what if you wanted to put a profit target on one of the long spreads? And let's actually go in and look at the Canadian. This was your entry price at $27.87. In other words, that's where the premium was when you entered. This is a long position, so you need to go above this number, okay? So let's just presume you put in a profit target at $27.90, okay? What would your profit be? It would be $3, okay? And that would be, you know, excluding the exchange fee. So it really is dependent on whether you are short, which is negative, or whether you are long, which shows up as positive. Okay, the other way to remember whether you're long or short, because sometimes we can get confused, especially when you have a lot of orders in. This is red. Anytime it's red, it shows short. Anytime it's blue, then you know that is a long position. To exit a long position, you have to sell it. To exit a short position, you have to buy it back. Does everybody understand that? Now, these are just examples, and really it's just a couple of examples of what you can do when you're trading a market report with binaries and spreads. Do I place my orders right away? Typically, yes, I do. I do not generally wait for expiration, Raphael, but again, this is a trader's option, whether they want to place a working order or not. I do. Anytime, for example, right now I have a crude 55.05, it's -1. If I click on the open position, okay, then you can automatically see that it is highlighted to buy, okay? It may seem difficult at first, but really, it's not as difficult as it seems, okay? For example, if you believe that crude is going to go up, what would you want to do? You would want to buy. Well, you have you begin with two options. I'll put it that way. You can buy a binary or you can buy a spread. But then you also have the option of buying a 2-hour or buying a daily. Now, you can see I'm doing the 11 a.m. and the 2:30 p.m., right? But let's say that we wanted to go in the noon, okay? and let's say that the bias is to the upside, okay? Where is price currently trading? Okay, price is currently trading on crude at 55.12. Okay, now I like out of the money binaries because you have a lower risk, but you don't have to use an out of the money. This would be considered 55.27. Okay, that's considered in the money because your risk is $66. Okay, so if I wanted to buy that, I could just click buy or the offer. Do you see how it's highlighted buy? And it tells you on the ticket right here, you're going to risk $66.50 and your maximum profit is $33.50 if you allow this to expire and it is greater than 55.27 at expiration, which is at noon. Does everybody understand that? That's not the only one. You could do the 27.25 at 55.47. Okay, what would your risk be on that one? Again, if you open the ticket, it tells you right here you're going to risk 27.25 to potentially make 72.75 if crude is above 55.47 by noon. But what if you say, no, I think it will go below 55.47 by noon? Do you have to close this ticket and open another one? No, you can just select it here. And again, it's going to tell you your maximum loss is 72.75. Maximum profit is 27.25. Does everybody understand that? If you take the time to actually read your ticket, then it's pretty much explanatory of what you're doing. But again, you have to kind of know the lingo, whether you're buying or selling. What does it mean when you sell? You anticipate the market going down. Okay, so if you enter, let's say at 84.75, and you believe price is going to go down, where would you set your profit target? Below 84.50, which was your entry price. Does that mean it will get there? No. Price has to be at 54.47 or less for your profit target to be achieved, and then there has to be a buyer that's willing to buy to get you out of the position. Because that's the way the market works, is just a collection of buyers and sellers. And either you're buying it or you're selling it. Does that clarify it, Mark? And if you're new to binary options, anything that's foreign is going to seem hard at first. But if you walk yourself through it very slowly, then you begin to understand, okay? And that's the reason I took the time to mark the charts up for you this morning. Let's say at 11 o'clock, price is right here at 55.21, okay? In that case, okay, you know, you're going to lose on both of the 2-hour binaries. Why? Because price did not expire above 55.65 and it did not expire equal to or less than 55.05. And I know when I first started trading binaries, I did not read the strike statement as closely as I should have, because on the strike statement, let's just take this one, 5507, okay? Now, the strike statement literally states crude oil greater than 55.07 by noon, correct? So if it closes at 5507 and you're short, would you make money? Actually, you would if you were short. And it expired exactly at 55.07. And Mark, that's interesting because I thought no too. But again, read the strike statement. The strike statement says crude greater than 5507. Greater than 5507, okay, means it has to be at least 5507.1 is that point of precision, okay? That would make the statement true. And this is where you get the true-false component of binaries, okay? So if it closed or the indicative was at 55.07, is that statement true or is it false? The strike statement says greater than, okay? Is it greater than 5507? No, it is 5507. So that makes it false. So if you were short, then you would have made the full value of the binary or the maximum payout. Do you understand that, Mark? I was not reading it that literally. I thought it had to be 55.06 for the shorts. And it was my mistake because I didn't really read the statement correctly. Now we have 2 minutes, and I mean, the sale, the short on crude is right where price is currently trading. Over on the Canadian, okay, we're right at the long side of the spread, okay? Now, this could go down, it could go up, but we have both longs and shorts in anticipation of it. This is what I call non-directional. In some days, you just cannot determine the direction. Personally, I think crude will probably go up and the Canadian will probably go down, the USD Canadian. But that's an opinion, and everybody has an opinion, right? And I am going to move this over here because sometimes if it moves very quickly, these working orders will be filled very quickly. Other times, the working order will not be filled, and you need to monitor it and decide, okay, do I want to exit or do I want to remain in the position? Now, and I also want to just mention that the correlation with crude does not apply when there is a Canadian bank rate statement, okay? Anytime you see that there is a Bank of Canada rate announcement, and it's usually at 10 o'clock on the same day that the crude oil inventories comes out, then do not trade the correlation between the USCAD and crude. And sometimes the crude oil inventory will not cause any type of movement in the USCAD. I've seen that as well. Probabilities are that it will, because Canada is the 7th largest producer in crude. But that's not a given either. And let's see what crude's doing. You can see crude is starting to go down, and it's actually below this binary here. Will it stay below that? Not a problem, Jerome. Sometimes you will see it spike down and then spike right back up. And this is one of the cases where you see, you're not getting a lot of movement here. Sometimes the movement comes in at the end of the day. Last week, I think it was the next day. It was a delayed reaction. So if the inventories of crude are negative, the price of crude goes up. You can't never tell. It depends on the reaction of the traders, okay? You would think, okay, if you have a negative crude oil inventory report, then crude would actually go up, because it means crude would be in demand. But that's not necessarily the case. Sometimes it goes down. It's how traders react to the report. And sometimes, because there is a report that comes out Tuesday prior to the crude oil inventories that's also based on crude. And sometimes it's a matter of whether that report is in line with the previous report. So basically, they'll do whatever they want to do. And this is also why I think limiting your risk during any market report, because market reports typically are emotional events. You'll have an immediate emotional reaction to the report, and then traders will sit back and they'll say, oh, well, it's not really that bad, or, oh my God, that's terrible. And they'll take the market down, or they'll take the market up. By limiting your risk, it kind of eases your stress in that it doesn't really matter what it does. I've limited my risk. So we're trading the potential for volatility to make money in the market. But limiting that risk is, I think, a wise choice in case it goes against you. Does that make sense, Raphael? And there are times when I see on the crude oil inventory report specifically that, it's like after lunch, and then all of a sudden they say, oh, okay, I like that report. And then they move the market, which is why you can also do a daily. It's almost like everybody went to lunch early and then they come back and say, oh, yeah, I like that. So then they take it the opposite direction. And this is one right now. They're just not certain about what they're going to do. Any questions so far, guys? Well, that's true, Jerome. It's really how the market reacts to something. And especially during a market report, are they perceiving that as good news? And right now, especially, one of the core issues is whether they're going to have that rate hike in December. And just about everybody thinks they're going to. But they're really looking at the economic reports as a lead indicator as to whether that rate hike will come in December. And you'll see a lot of spikes off of these market reports where they think, oh, gosh, yeah, that's going to raise the interest rates. So tell us which time frame is better, the 9 to 11 or the 10 to 12? As far as what, Raphael? Trading a market report or trading in general? You know, I don't like to say there's a best time frame for crude oil inventories. I don't think there is a best time frame. Because what you're asking me is which one is the best, and it depends on how the market is moving at that particular time. Right now, everybody's more antsy about the rate hike versus the crude oil inventory report. And you have to remember, crude oil is the price of crude is somewhat related to inflation. Okay, so they can perceive crude oil going up as impacting inflation. Because it's calculated into the cost of living. So when crude goes up, cost of living goes up. When crude comes down, cost of living comes down. And I have seen the times, Raphael, where if you went out until noon, you were out too far. So you wanted to do the 11 a.m. You know, I kind of cover that by doing a daily, because the market can move whenever the market wants to move, basically. So if you get a real quick pop, you're better off doing the 11 a.m. If it takes a while, then you're better off doing the daily. And you don't know which one is going to happen, in all honesty. You'd have to have a crystal ball for that one. And I don't have a crystal ball, so. Any other questions? And this is a great example. Do you see how price is at 55.01 right now? Now let's say that it's 5 minutes until 11 and this is still at 55.02. Typically, I will actually come in and take off the working order, okay? And that's because I'm expecting it to be below 55.05, and that would give me the full profit potential instead of only a portion. Do y'all understand that? And that's where you just have to sit and watch it. Okay, any other questions? For a beginner, would you say just hang in there? I bet when you were getting started, it was hard. Yes, it was extremely hard, Jerome. And, you know, I like to use analogies a lot, okay? And one of the simplest analogies is McDonald's. If you get hired at McDonald's to work the grill, you're just flipping hamburgers, right? I mean, how hard is that? But they have a 2-week training program teaching you how to flip a hamburger. And I don't think it requires a lot of brain power to flip a hamburger. Not being ugly or anything, but, you know, there's not a lot of skill involved in flipping a hamburger. But it takes them a 2-week training session to do it their way, okay? Trading, a lot of traders will come into it because people like me that have been doing it for years make it look easy. But we make it look easy because we have been doing it for so long. You know, I can look at the price bars on this chart right now and tell you within a split second whether that is a reversal bar or not. Okay? For you to learn that, you have to do it over and over and over again. Okay? It has to become automatic. That's the reason they have a 2-week training period at McDonald's, because it has to become automatic. It can't be where, okay, should I turn this? Should I? No, it's automatic for him. Okay? What's the name of my book? I have 3 books. And let's see, there is, I'm going to open the PowerPoint back up so I can show you. It is The New Trader's Guide to Trading Nadex Binary Options and Spreads, Trading Nadex Binary Options Using Currencies, and Trading Nadex Binary Options, Keeping It Simple Strategies. Yeah, and you know, Nadex provides a free demo for you to learn, and they provide free education for you to learn in. Okay? So, I mean, you cannot get any better support than what Nadex provides you. But you have to take advantage of it. That means you have to watch the videos. You know, you have to get in there and try to understand what is going on. And then implement it on the live edge of the market, which means in demo account, take the trades. Okay? And compare. Okay, this worked for me, this didn't work for me. and then be able to implement it the same every time you enter a trade. That's the hard part. All right, I hope everyone has a wonderful day. I hope you enjoyed the presentation. All of my books are available in print, Jerome. You can order them from Amazon in print or from my website.